How's it going, everyone? It's Sam. I wanted to talk to you today about what I would invest in if I only had $5,000. So, I got this brought up to me in a live stream recently, and it makes me think over my investments a little bit more because right now I'm investing a significant amount, at least for my portfolio, but I'm buying a lot of different stocks because a lot of the time there's a lot of volatility, and I see a stock that I think has a lot of potential. And I'll be honest, I'm shooting this Tuesday night, and right now I don't know what's happening in the market for tomorrow, but just today, towards the end of the market, we bought a new penny stock called BNGO, and by the time you see this, I might look like a fool, I might look like a genius, but right now, I bought it at $1.25, and we're up about 40% on it. So could I have put more money in some other stock? Yes, but I saw this one moving up. I saw some really good catalysts, and I actually did a full video on it last night, so you can check that if you want to after this video. But I put my money there instead of reinvesting in another different company. So I think a lot of people see that I am investing in a lot of new companies, and they're kind of confused. So I wanted to go over some of my most bullish companies if you were starting a portfolio and what I would want to invest in if I had to start over, if I had to build a position today. Now, how I'm going to do that, I'm going to talk about some different index funds if you're interested in that. I'm going to talk about some different like really large cap stocks that you've definitely heard of. I'm going to talk about some smaller, a little bit more risky plays, and then I'm going to talk about some very small companies, and then I'll talk about what I would do with $5,000. So I'm going to present a couple different solutions, a couple different companies that I think would be valuable at each level. So if you guys like this, please leave a thumbs up. I really appreciate it. If you want to hit subscribe, that would mean a lot too. We're on the road to 65,000 subscribers. We're also in the last 2 days of the sign-up period for WeBull, where you can get 4 free stocks if you deposit $100. Definitely check out the link down below to that if you want to do that. You can trade up till 8 p.m. Eastern time at night, so you can trade before the market by about 5.5 hours and after the market for 4 hours. So it's really useful, and you can trade Bitcoin now on there too if you want to get into that. And if you want to join the Patreon, know exactly what I'm buying and what I'm selling. I told everyone on YouTube that I was buying BNGO, but that was about an hour and a half after I was actually able to buy it because it takes a while to make the video. By then, it ran up a little bit. So if you want to get in a little bit earlier, you can check out the link down below to Patreon, where you can join our Discord and be with about 1,200 other investors. So first of all, I want to hit on some different index funds. If you want to invest in index funds, I have maybe 30 to 40% of my portfolio in index funds. I think it's a good way to weight your portfolio or put money in some retirement funds that you just don't have to worry about. Now, you do risk a little bit less, but you also don't have as great a return. So a couple different index funds or mutual fund ETFs that I've been looking at. First of all, you have VOO, which is just the Vanguard 500 Index Fund ETF. It's a great index to hold if you're looking long-term, want to diversify a lot. I hold this one myself, but if you want to go with something with a little bit more growth, you could go with something like an ARK Invest fund. I talk about ARK Invest a lot on this channel, and they've done really well. So just looking at 3 different ETFs here, I would be most interested in probably ARK K or ARK G. So they have ARK K down here, Innovation ETF. Cloud computing is the major part of this, along with e-commerce, molecular diagnostics, gene therapy. You can see Tesla is 11% of this. And then the other one would be ARK Genomic Revolution ETF. And they have also done really well. So these two have been up, I think, over 190% each, if I'm remembering right, just on the year. That being said, these are a little bit riskier and aren't as diversified as the VOO fund. Now, looking at some major cap stocks, some really large companies, I like JPM. So I've talked about this one before. They had about $9 billion worth of earnings last quarter. If they are able to do this for 4 quarters out of the year, that puts them at about $36 billion in net income. This puts them at a price to sales ratio, or a price to earnings ratio, I should say, of just over 10. So a really good number there. They pay just short of a 3% dividend. And they are now able to buy back their shares. So the Fed, or the SEC, I believe, was the one that kind of cut that off. They said that these banks had to store up a lot of cash just to be safe. They have not been able to do that. This will probably send the stock price up over time. The next company is Disney. Now, I really like this one. It's moved up a lot over the last month. I've been holding this one for a while, and their streaming service is just blowing the doors off everyone's expectations. They're up to 90 million subscribers. They're, I believe, just short of maybe 50% the size of Netflix, and they've done this in 1 year. And they have their intellectual property and their park system too, so that's something to take into account. The last major stock on this list is Facebook. This one's just a beast. I think this one will just continue to grow. They've moved up a lot on the year because before the pandemic, they were only a $220 stock. Now they're up 27%, but they're able to grow revenues very quickly for a company this big. So I would take that into account. They also have been able to scale up some of the other sides of their business like Oculus, WhatsApp, Instagram, stuff like that. So I would take that into account. And I think these are three companies that if you're looking over the long term and you want a stable stock, as stable as I could assume you can get, really. I mean, of course, these have some growth. I think these are stocks that will outperform the general market. But I think these are more stable companies than the ones that we'll get into here in a second. So getting into the stocks that have a little bit higher growth but are a little bit riskier, we have Tattooed Chef. This is one that I have invested pretty heavily myself in. It's one that I really like. I think that if you don't know what they do, they have plant-based foods. And I think this one will run up over the next few years. They're growing revenues at anywhere between 50 and 60%. I really like it for that reason. And they're still not in a lot of the stores that they're supposed to be in. So they've worked with different stores for years and they provide the food to the stores and then the stores slap on their own label. It's called private labeling. They've been doing that for years, but recently went public with their own brand. The next company is SBE, which if you don't know, they're merging with ChargePoint. Had a down day today, but I really like this one long term. I think that if you're looking for something over the next 10 years, they will be a great solution for you. Now, something that a lot of people haven't really thought about is that they are really just into EV charging right now. But I heard a little bit of a rumor that they might possibly acquire a company or merge with a company that is in either natural gas or solar. So I said this in one of my past videos. We're only analyzing this company based on what they do now, only based on what their business model is now. But a lot of companies, while they scale up, they acquire or they buy or they work with other companies that get them into different sectors and increase their market. So this is something to consider with SBE, but I think even if you're just looking at charging down the line, I think they will own a majority of the market share. Now, this one could go down short term, so that's something to consider too. And then the last one on the list for this kind of higher risk, but still not super high risk, is Fubo. So Fubo TV is a company that I own myself. I'm up a significant amount. I think I bought around $27 a share. And we have ridden it up and down a little bit, still up 40%, but they are a streaming stock. They also are going to get into gambling down the road. Now, I would be mixed between this or Disney at this stage because I think Disney provides a lot of value and isn't as risky as Fubo. So that's something to consider too. I'm really big on Disney if you haven't caught that. And then going into the more risky stocks that I think could be good right now. And again, I'll get to what I would buy personally if I had to pick, let's say, 3 stocks with $5,000. But this one is one that I was just talking about earlier. BNGO has a lot of catalysts. I won't go over all of them right now. But if you want to check out the video from last night after this video is done, you can check it out. I'll put it on the end screen. But I really like this one right now. I think it'll keep running. We also have CLSK. I bought this one at $18 a share. A little bit of a down day today. And again, I don't know what's happening on the day that you see this yet because obviously that's tomorrow from when I'm shooting this. But this is into the grid. They're a grid company helping with electric grid. I've done a full video on them too. And they also bought a Bitcoin mining company. So as the price of Bitcoin goes up, so does the price of CLSK in theory. So that's something to consider too. And then the last one that I like here that's a little bit higher risk, but it offers a lot of protection right now is FUSE stock. So this is an $11.34 SPAC. I say it's higher risk because we don't know who they're merging with yet. They have not come out with a merge target, but the word is they might merge with something like BlockFi or SoFi. So right now it's in at $11.40. It could drop down to about $10 a share, but if you don't like the company that they're merging with, you can call up your broker, get back $10 a share if it dips below that. So that is the last one that's a little bit higher risk because we don't know who they're merging with. Now, if I were to take $5 of my own money and I had to invest in these companies, who would I invest in? Well, first of all, I would invest in Disney because I think they'll hold down their portfolio, and I think over the next few years, they'll just continuously add more subscribers. And I think once the pandemic ends or their parks reopen really at scale, I think the price will go up because they'll start reporting really good numbers. The next one, Tattooed Chef. This is a company I think is pretty low risk right now, and I think would provide a lot of value. So I'd probably split it up 1/3, 1/3, 1/3 between these three companies. And Tattooed Chef, I think, has a lot of growth. And I think they will provide a lot of value with their growth in the future, and they'll be able to scale up. And compared to their competitors, they're still really cheap compared to like Beyond Meat or Very Good Food Company. Then the last one, I think there are a couple different ways to go about this. So if you want to go really risk averse, you could do VOO. I'm pretty risk averse myself, so I might do something like an index fund just to hold down the portfolio. It's a lot lower risk. But if you don't want to go with that, I think you have a couple different solutions. First of all, you could go with FUSE stock, the one right here, because there is such a limited downside. If you're trying to make a lot of money real quick, you could look at BNGO because I think that one has a lot of potential, but it's a penny stock, so you have to be willing to risk all that money. So you could also go with JP Morgan Chase, which is just a dividend payer, mammoth of a company, pretty much backed by the US government. Now, if I haven't mentioned some stocks that you like or that I've talked about, it's not necessarily that I don't like them because I hold a lot of stocks here that I've not talked about, but I'm just looking at if I were to break down like my top 2 or 3 picks in each category and then what I would personally feel comfortable with. Now, I have a different risk tolerance than a lot of people. A lot of people are willing to jump from one stock to the next and to the next and to the next and just be in like 3 or 5 different stocks. I hold a lot of stocks, too many stocks, honestly, but I myself am pretty risk averse. So I'm willing to put 1 to 3% of my portfolio in a risky stock, but I still have a lot of other companies in there. I'm not willing to put 10% of my portfolio in a penny stock or anything like that at this point. So that is kind of where I'm sitting. Again, it would be Disney, Tattooed Chef, and maybe an index fund, maybe JP Morgan Chase, or something like FUSE that is pretty low risk. But if you wanted to substitute BNGO, you could have some high growth there. So thank you guys so much. I really appreciate it. Thank you for checking out WeBull and checking out the link down below. If you wanted to check out BlockFi, there's a link down there. You can get up to 8.6% interest on your cryptocurrency. So I've been using that a lot recently. I've gotten some nice interest there. And if you want to check out the Patreon, know exactly when I buy and sell, you can get that down below too. Thank you guys so much. If you want to see the video on BNGO, the penny stock that I just bought, that's up 40%. And from the time of this recording in about 8 hours, you can check out this video here on the end screen. Thanks.